Hey, Steve, hope you're doing well. So we're coming together today as we do each quarter to recap the results of the most recent ISG Index research. So we just wrapped up our 74th consecutive index call. So let's jump straight into the Q1 results, and we'll primarily be looking at these results from a global perspective. So Steve, the combined market ACV for the first quarter was a really robust 17.1 billion, up 11% year over year. And this was the first time ever that the combined market has been over 17 billion.
Yeah, I think, Stan, you're right. It's really great results. This quarter really builds on the success of Q4. And though, I think we're still in the pandemic and in many ways with many organizations and certainly, different economies across. But I see IT spend is really starting to return to normal levels. And, we continue to see the move to as a service. As we suspected, cloud adoption accelerated in the quarter. We're going to continue. And we saw some really big signings in Q4 and Q1 with some of the mega deals. So it was overall really great results. You're right.
Okay, Steve, let's move to managed services, which came in at 7.2 billion in ACV. And this is the second consecutive quarter where we're over 7 billion. And I think, Steve, you and I both agree this is a good indicator that we're likely returning to pre-pandemic norms in managed services.
Yeah, you're right, Stanton. We really had 4 mega deals in Q1, which really helped push the market up. And this compares to the 4 mega deals that we had in Q4 of 2020. So, over a 2-quarter basis, we've had 8 mega deals, which we've got to go back a while before we've seen that. 7 of those 8 were in Europe. So we're seeing really strong growth across the European market. The other thing, though, that I'd really like to call out is we had great volume this quarter. We had over 500 contracts awarded in Q1, and now we've had 3 consecutive quarters with over 450 contracts. So I think on all signs, we're really showing a healthy market. It's on the little lower end from the ACV standpoint, but we did see increase in the 20 billion or the 20 million to 30 million range as well, which is all healthy. So it was good.
Okay, as a service had its best quarter ever with 9.9 billion in ACV, and we think we are likely to break through 10 billion in ACV in Q2.
Yeah, I think we'll smash through the 10 billion in Q2. I really do. I feel really comfortable. I think when you look at the growth of the hyperscalers with Google, with AWS, Azure, sort of across the board, we're really seeing growth there as we go forward. We may see a little bit of growth, and we talked a little bit about some deceleration potentially in the broader basket. But I think if you look at the hyperscalers, it's nothing but growth potential in that space as we go forward.
Okay, Steve, let's talk about ITO. We had 5.8 billion of ACV in Q1, a 1% gain over Q1 20, so essentially flat. But what's really interesting here is the ADM activity, and because it was in at an all-time high at 3.1 billion.
Yeah, you just nailed it, Stanton. It was a 53% of the market, which is the first time really ever that we've seen that level of growth in ADM. It really crushed it. It was up 23% even from historic averages. I think what it shows is enterprise clients are really shifting to public cloud for their infrastructure and going through really massive transformation on the app side as it's refactoring, it's containerization. It's somewhat to the expense, I think, of the software as a service players. It's really bespoke apps that continue to move to the cloud and some traditional legacy apps that are moving to the cloud. You combine that as well with what we see on the product engineering side, I think it bodes really well for software vendors.
We saw a really strong rebound in BPO in Q1 with 1.5 billion of ACV, which was up 43%, Steve, year over year.
I don't think I've ever seen a stronger quarter for BPO as far as a percent increase. It's still lumpy. We still saw, some challenges in facilities management that we talked about. We saw challenges in contact centers. But engineering was up, successive quarters over 300 million and almost $1 billion of new ACV added since the height of the pandemic, which is just phenomenal. We also saw industry BPO is now almost 30% of the combined BPO market. So again, just really great growth on the industry specific BPO. I think if you look at those two sectors, so industry specific BPO and product engineering and R&D, you're really starting to see the market split out in that space. Great opportunity again with service providers that really have deep software skills going forward. And I think analytics is also continuing to play a really big role in the growth of BPO.
Okay, Steve, let's close out with a discussion on infrastructure as a service. Its ACV came in at $7.2 billion for the quarter. This is actually the first ever $7 billion quarter for infrastructure as a service. That said, year-over-year growth did decelerate a bit, down to 18% from 36% in Q4 of last year.
Yeah, Stan, I'm not really overly concerned about the decelerating growth. I know we talked about it on the call, and you and I and some others spent quite a bit of time over the last several weeks really dissecting it. I think the major hyperscalers are still growing. There remains tremendous opportunities with enterprise clients. Microsoft and Google's cloud business should both grow 40% plus this year. AWS should grow by at least another 20%, even though they own almost 35% of the cloud market now. But there's a long tail of other cloud providers and hosting providers and carriers that are bringing it down a little bit. And I think even Oracle and IBM's cloud business will struggle with growth given the momentum of the three larger hyperscalers. I think there may be a slight pullback from the investor community, but enterprise clients and service providers continue to go full steam ahead on shifting to public cloud transformation. SaaS, though, I think is a different story. I do see a pullback on the broader SaaS as a software as a service market. The big providers such as ServiceNow, Salesforce, Adobe, Microsoft 365 are likely to grow in the mid to high teens. But I think many of the mid-tiers will only see kind of single-digit growth. I think we're also going to continue to have some data privacy concerns in EMEA, especially with America-based SaaS providers. As we've talked about before, the replacement for the EU-U.S. privacy shield still isn't there. And the EU said earlier this week that it could be years away, which has really raised concerns for America-based SaaS providers. The EU is still very wary of protecting European citizens' data from U.S. intelligence agencies, all of which I think will continue to suppress the SaaS market a bit in our second largest market. So I think, the 18% growth that we see in sort of mid-20s or low to mid-20s overall for the sector is probably the right growth story right now.
For more details, please visit the ISG Index page on our website, www.isg-1.com.